Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about CSX CORP quarterly report. CSX Corporation offers a wide range of businesses and services, including rail transportation services, intermodal container and trailer transportation, bulk commodity operations, transportation of chemicals, agricultural products, minerals, automotive goods, forest products, fertilizers, metals, coal, coke, iron ore, and other commodities, intermodal services through a network of 30 terminals, drayage services for intermodal shipments, distribution centers, and storage locations for the automotive industry, rail-to-truck transfers for non-rail served customers, leasing and ownership of approximately 35 locomotives. The recent surge in CSX Corp's stock price can be attributed to a combination of strong earnings performance, operational improvements, and strategic developments. The company's ability to surpass analyst estimates with its quarterly earnings reports, particularly in Q4 2024 and Q3 2025, contributed significantly to the increase. Additionally, CSX's efforts to enhance operational efficiency through initiatives such as improved train velocity and terminal dwell time have also positively impacted the stock price. Furthermore, the company's progress on major infrastructure projects, including the Howard Street Tunnel and Blue Ridge Subdivision, has demonstrated its commitment to optimizing network fluidity and driving future growth. The reopening of these projects ahead of schedule has further boosted investor confidence. The positive sentiment from analysts, with multiple firms issuing buy or overweight/outperform ratings and raising price targets, has also contributed to the stock's appreciation. Overall, CSX Corp's solid financial results, operational enhancements, and strategic developments have collectively driven its stock price increase of over 9.37% in the past year. The primary drivers of revenue growth or decline in the company's financial performance are largely attributed to lower volumes in key segments. Specifically, a decrease in coal and intermodal segment volumes has had a significant impact on revenue. Additionally, year-over-year comparisons reveal a 4% decline in overall revenue. Within the rail segment, revenue has shown a slight decline from $3,405 million in Q3 2024 to $3,380 million in Q3 2025, while the trucking segment's revenue remains relatively stable. Net income and profit margins decline due to increased expenses and revenue shortfalls. The company's financial performance has taken a hit, with net income plummeting by 21% compared to the same period last year. This decline is largely attributed to higher operating expenses and lower revenue from coal transportation. Despite revenue growth in other areas, these losses have outweighed gains, resulting in decreased profit margins. The combination of increased costs and reduced revenue has had a significant impact on the company's bottom line, necessitating a closer examination of operational efficiency and revenue streams to mitigate future declines. Based on the provided financial summary, it is clear that the company is indeed generating positive operating cash flow. The statement explicitly mentions that the company generated $3.2 billion in cash flow from operations during the specified period. This indicates a strong financial performance and ability to generate sufficient funds to meet its operational needs. Management's outlook. Focused on risk management and investment, the company's management is optimistic about its outlook despite modest revenue growth. They highlight strong cash flow generation and a solid balance sheet as key strengths. However, they acknowledge headwinds from higher operating expenses and lower coal transportation revenue. To address these challenges, the company is investing $1.1 billion in its rail network through capital expenditures. Additionally, management is taking steps to manage interest rate risk through fixed-to-floating swaps. Furthermore, the company is repurchasing shares of its common stock, demonstrating a commitment to returning value to shareholders. Overall, management's strategy focuses on managing risks and investing in the company's growth, while prioritizing shareholder returns. The company's financial summary reveals limited information on acquisitions and divestitures. While there are mentions of rail network improvements and locomotive purchases, these appear to be investments rather than acquisitions. Similarly, a note on capital expenditures suggests upgrades rather than new acquisitions. On the other hand, no explicit divestitures were mentioned, although the company did repurchase approximately 1 million shares of its common stock during the quarter. Overall, it seems that there are no significant acquisitions or divestitures to report. CSX has a history of buying back its own shares, with notable instances including a 9-month period ending September 30, 2025, where 23.7 million shares were repurchased at a total cost of $1.3 billion. A quarter where approximately 1 million shares were repurchased at an average price of $33.76 per share. There is no mention of dividend payments in the provided summaries. That concludes the financial summary for CSX CORP. Feel free to comment below, and I will be happy to answer them when possible.